Today Nifty has touched a new high and it has taken almost 5 months of consolidation for Indian markets to regain its new high. Now that's the global setup for you in dollar terms. You always look at market in dollar terms. Now we may feel very excited about the fact that Indian markets are at a new high, but in dollar terms actually India has done, well, it's not even in the top quartile. Nasdaq has given 36% return, S&P, which is the benchmark of US market, 19%, European market 16%, and Dow about 9%. Of course, China and Hong Kong, they've had their own problems, and that explains why they've actually not done rather well. Now, what is the way forward? And that is what it needs to be understood. Now, are we in for a last hurrah before the year ends? Are we in for some wild profit booking before the year ends? Now, to establish that, let's look at the factors. What could be the concerns in the month of December? Well, by Monday, markets would have adjusted to the outcome of state elections. Inflation, which was scary, is looking toppy. Interest rates, which were moving higher, now they are peaking out. Earnings season, well, that's behind us. So are we in for a last hurrah in the month of December? Looking at the positioning of the market, that large cap stocks are rallying later than mid and small cap stocks, there is a case which could be made. That's the previous high for Nifty, and this is where we are. Now, first let's establish that what has taken the market, and when the market comeback has been from 15th of September to, let's say, first week of December, what has really aided to the market? So between the previous high versus this high, what has changed for the market? And very interesting set of stocks have actually made a comeback. Unusual surprise, autos. Unusual move, I would say, oil marketing companies. But the real chunky move, I think, in last quarter, if I say from September to now, actually has come in autos. Then within the mid-cap space, exchanges. Who would have thought that BSE would actually give you 100% return? Yes, it has. In less than 6 months, BSE is up substantially. Those are some of the mid-cap gainers, which includes real estate, power finance, REC. What phenomenal moves there. And within the small cap space, BSE, MCX and Suzlon, they've given you great returns. So it's been a quarter where, irrespective of what you actually were holding, you've been smartly rewarded as long as you did not panic and you did not sell. Now, what is the way ahead? What are the December returns? And this is where I think the seasonality kicks in. If data is anything to go by, the market returns in the month of December are actually more positive than negative. One looks at 2020, 2021, 2022. The hit rate of Nifty in last 10 years, 60% for the Nifty, 70% for the mid-cap index and 80% for the large cap. So are we in for more of the same, which is that the seasonality in the month of December continue? Let's take that conversation forward with our technical experts, Kunal and Nooresh. And Kunal, I'll turn to you. In the month of May, sell and go away, it did not work this time. But will the Santa Claus rally, which historically has happened, that data which you have, 60% time in Nifty, 17 mid-cap, small cap, will history repeat itself? Because these are very fat numbers, Kunal.
And I think it's an excellent understanding in terms of how the setup is. And what I've looked at the charts, Nikunj, is how the global setup has panned out over the last 1 month. And it's been a fabulous bull market rally across various asset classes. So we look at equities and we predominantly look at the US indices, Nasdaq, Dow Jones, even S&P has given similar returns of more than 10%, 12% broadly. European markets, DAC, CAC, FTSE, I think all three of the indices have also given double-digit returns, 9% to 10% broadly for the indices. Asian markets, as you rightly mentioned, many of them are starting to show signs of pickup. Nikkei, in fact, is perched at a multi-year high, but it's on the verge of doing that. Nifty has already done that today, making a fresh high for itself. Then the other asset classes, that whether the equities is the only asset class which has done reasonably well. In fact, bullions, you have likes of gold and silver, which have made a dramatic comeback in the last 1.5 odd month, giving returns of more than 12%, 21% respectively. And cryptos, Bitcoin has also done exceptionally well from the October lows from 26,000 odd to now 37,000, 38,000 levels for itself. And on the other hand, just to end up, dollar index and crude oil, both these asset classes have gone through a correction for themselves. So this indicates that this is a full-fledged global bull market which is at play. So yes, you can call it as a Santa Claus rally.
Okay. Nooresh, if history is anything to go by, December has been rewarding. But if the trend in 2023 is anything to go by, historical trends in 2023 have got challenged. The selling in May did not happen. The comeback in June was unreal. The stability in the month of October, we've seen it like never before. So our market's looking different. Our market's acting differently.
So the seasonality is a little tough to look at because it is not necessary that things happen exactly the same way every time. So there is also a cyclicality that January first week tops are tough ones to actually cross. So if you go back to all the years, some of the major tops, whether it is 2008 or 2018 or 2011 or say even 2015 have happened in January. Generally fresh inflows are supposed to come in January, and that is where it tends to top out in terms of foreign flows. But overall, what is interesting at current point of time is the structure of the global indices. Irrespective of the various announcements and things happening around the world, you look at various indices, you have Nikkei trying to make a new 52-week high and a multi-year high. You have DAX, which is 1% away from an all-time high. You have Dow Jones yesterday hit a new 52-week high. You have S&P 500 in touching distance of a 52-week high. And both these indices are not far away from their all-time highs. Similarly, in India, we've hit new highs on Nifty 50, but we've already been hitting new highs on the broader market, the Nifty 500 and the Nifty 50 equal weight, etc. So the trend is strong, and we have started to see some of the large caps make a move. So we are seeing some leadership coming back in a ICICI Bank and a Reliance Industries. So overall, the structure is positive. We could get overbought around 20,500 odd levels. So one has to be on the lookout of a pause going forward. You're riding onto the trend, keep a trailing stop loss. At higher levels, you want to reduce leverage rather than to make leverage.
Okay, so the point we're trying to perhaps bring out is simple, that the market have rallied because of the global construct. While we may talk about India, but the real bottom line here is that global markets have rallied. From the October low, yields, 10-year paper, crude, FIS selling, everything in a sense has got reduced. So this is like a global denominated market, and if anything has to be looked at, look at crude, 15% off from the high, dollar index 4% off from the high, yield has come down from 5% 10-year paper to about 4.6, 4.7 on last count. And at the same time, it's a global rising tide phenomenon. So anything happens locally, which is that if Indian markets correct and if global markets are intact, you should be buyer. As of now, global markets have not corrected. But if global markets correct, well, we can revisit our thesis. But so far, it looks that we are in for a strong, session, so to speak, in terms of the market action. Kunal, that's the sum and summary, right?
Absolutely good. So again, I think in terms of event where many traders are trying to lighten up the positions, or maybe there's a FOMO effect that maybe you missed out on the good part of the rally, and let's wait out for the events to play out. I believe that this could actually be a good time in case if there is any kind of a small dip. I think one should be looking to buy that.